Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, January 17th, 2023. It's now the 14th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 has printed the combo and sequential sell setup 6 count. And to negate that for end of day on the 17th, there must be a close below 3919.25 for the price flip to the buy setup count 1. So there's a little bit of room to the downside so that we don't lose the count by getting under this for Tuesday. But after that, it could be questionable. So stay above this and we print a 7. And then to print the 9 end count, S&P 500 price needs to be above this close that was printed on the 12th. Same thing with the 8 sell count here. It needs to stay above that level here on the 11th. So S&P price needs to keep going up. And price did close above the relative retracement disqualified up 1 for end of day Friday. So it would be nice to see that move up and then try to qualify and confirm this relative retracement up 1 from the upside. And trend factor has shifted over to this bar as price did get above trend factor disqualified 1 that was right below the relative retracement level. So by getting above it and closing above it, that negated that whole series of trend factors. So now we have new trend factors, and those levels are in the sidebar over here starting with 38.85. You can see the rest here. The S&P 500 daily cloud chart looking at the Bollinger Bands, the Channel 3 and Ichimoku cloud, and price closed above the upper Bollinger Band, and that can be significant for the S&P 500 index as in recent history, showing that one close above it and then a pullback. And same thing over here, one close above it and a pullback. So we could expect a slight pullback for the Bollinger Band to catch up and start moving up. And price is right up against the Channel 3 high, which is normal for the index S&P 500. That can stay above that for several days. However, that has not been the case in recent history either, except for the past few bars. This one was a close above it. This one was close. So we could have a few closes above it and not have to be concerned about an immediate pullback. Bollinger Band is a different story, though. Let's look back at the lagging line starting back here on November 21st. You can see that it was staying right around the Ichimoku baseline and finding support and resistance there, mainly resistance, and then it went sideways right along it here as it's going sideways, the baseline, and then just took off. And next is the conversion line, which is not as good as the baseline. The baseline can be support and resistance on its own without too much over here in the current price helping it along. But the conversion line needs some help over here in the current price. So let's take a look at that. So that will be at 4009.45. Let's see where the Bollinger Band is at 39.86. High Channel 3, 40.06. So yeah, maybe the High Channel 3 and the conversion line could be a bit of resistance. conversion line looks like it will be going sideways for a few days longer. And the times that I have seen the conversion line really act as severe resistance and support for the lagging line 26 bars back is when the conversion line for current price is in the same area, very close, give or take a few points in the general area, and that's when the lagging line 26 bars back can hit the conversion line and really have formidable resistance. The NYA top collar chart, we'll look at the NYA to SPKX ratio, basically value versus growth, to see that it has been having a hard time getting below 39.97, and that would signify that growth is having its day in the sun, and it is not happening. It's actually pointed back up and could get back up to 4, and I think if there's a second test up here, it could break above it. And the big banks started off earnings season and did very well. Almost all of them that reported, there was 4 big banks, ended up in the green. So that could be the new leadership, or at least part of it. And the New York AD line, I was able to move the top line here of the descending broadening wedge pattern. I had to move that up a little because it did get above the whipsaw area quite handily, so I had some whipsaws here and here, so I was able to move it to rest on top of this peak, and now it's bumping up against that one, so that's the real test to see if it can get above that and keep moving up. And as I've pointed out, I think recently, that you can look at the peaks in the NYAD and see when they start heading down like that, that means value is having its day in the sun like that. Same thing over here, really had a downdraft, and value was having its run up there. So to see that running up like that, and growth, meaning the big fangs, Microsoft, Apple, Tesla, etc., not doing too well, is really a sign of a regime shift, I believe. And the New York ratio adjusted breath oscillator here is really hitting the nosebleed area. It's rivaling this June run up here. And NYA price really had a nice run up. Look at these white candles in the thumbnail, like the S&P 500. And it did make it above this horizontal line, signifying some of the peaks of these big runs for the big W's to the upside where they failed. And this time it went above it. And now the next test is this green support and resistance line here, and that's about 16,000, right above that a little bit. And the ratio adjusted McClellan volume oscillator looks the same as the breath oscillator. It's getting up near some of these extreme peaks up here. And the ratio adjusted summation index of the McClellan ratio adjusted breath oscillator is above 250 and trying to get back up to 500. Same thing with the ratio adjusted summation index of the McClellan ratio adjusted volume oscillator. It's getting closer to 500 here than breadth. So the question is, will it just tag it similar to over here in November 21 and then fall out, or will it tag it and just keep going and get above it, and then we again get into a period like this here? And our SI did get above this green 65 line and is now approaching 70 here, so it's looking very strong. And the on-balance volume, as I expected, had a nice blast up like that. I thought it might happen earlier, but there's been some delayed reaction and people are now getting on board to get onto the right side of the market here. And it did make it above this large and long support and resistance line here, and it's well above that. And the New York stocks only AD line really blasted above this falling peaks trend line here. Had a couple of whipsaws here and here. Let's see if we can move this up and it meets this peak here. Okay, I just made the adjustment and I think I like it. I had to move the anchor here right before the highest peak, so we could consider that a slight whipsaw. And then I moved it here so it matches this little indecision area here, and that could be considered the whipsaw. And now that makes the AD line butting right up against this downtrend line here. So we'll keep it like that for a while and see what happens. And let's adjust these arrows here that signify the divergence here and here. I'll try that now. Okay, I adjusted it and I think I like that too. And here's what it looks like, and I think that's a good thing to do because we're getting near these extreme peaks and could be a turnaround. So if it hits this red line, and this is the McClellan breadth oscillator for the stocks only AD line, if that hits up here and then rolls over, we will still have the divergence here and here. And being up here at the peaks, that's a bearish divergence. And NYA price is approaching that 16,000 green line here, so it could get a little bit overstretched there and get turned back. So we're not out of the woods yet as far as stocks are concerned and equities. So let's be cautious there and monitor this. Depending how far it pulls back, that would be the thing to watch. And then again, it could look something like this over here, the end of that June run. I remember when it made it down to here and started moving up, I couldn't believe that it was going to hit this support and resistance line going back to the COVID crash here. And I actually moved it back and was going to eliminate this line, and then I just couldn't believe I had to extend it further to accommodate this. So where would that bring it if we extended it out? Oh, that's really a large run. That would be completely unbelievable to make it up to here to meet this line somewhere up here, but this was completely unbelievable to me too. And the intermediate term volume oscillator for the NYA, I don't know if you saw this last time we looked, I straightened this horizontal line to here, and it's now hitting up against that, so it would need to get through that. And here's that peak here, that unbelievable peak at the end of the June run in August or so, and then it just fell off the face of the earth. But this time it differs greatly in that right now as it stands we have a higher low. So all we need to do is get past this and start moving up, and you can consider this a higher high. So there'll be a higher low and a higher high here on the intermediate term volume oscillator. And same thing with the intermediate term breadth oscillator. Horizontal line, get back above it. We'll focus on this peak here, as this one was unbelievable. But you never know. If it does that and starts moving up, then we'll consider this. And the instruments above there, 200 period simple moving average in the NYA is just skyrocketing straight up. I was wondering if it was going to fall back under 40, and then it just turned around and took off. It's now above 60. That's unbelievable. And the US dollar had another down day. It had a low of 101.72. And we have this horizontal line at 101.42. And you can see that the dollar diffusion indicator from Martin Pring, thank you Martin, had a uptick here. So it's getting closer to its signal line. So we're getting overstretched. You might want to start thinking about buying into the dollar again, and maybe even volatility. And here's a somewhat newer ETF out there, Convexity 1X Spikes Futures ETF, SPKX. And it pretty much stays current with the S&P VIX here, so you can watch this and see the SPKX move. And it has printed the combo and sequential by countdown 13s over here. And this is the 8th bar after the combo printed. So it's still 4 or 5 bars away from the 12 bar metric, where we call these 13s invalidated for any more upside move. And it looks as though the up wave has just started by printing a 0. And the volume traded on this instrument, SPKX, is consistently low. You can see on Friday, even though it had a pretty big bar, 1,619. So that could just be one market maker or special interest person getting rid of 1,600 shares. So yeah, it's notoriously low volume. Look at when it started. It had some pretty good ones, but then nothing. You can see all these nothing days. And but it is way down there, and we are way stretched up in the S&P 500 and NYA. And the MACD had a cross under of its signal line well below 0. And RSI is digging a trench below 30 here. And the on-balance volume is pitiful. Whoever was in there has booked out of this. And the stock chart's technical ranking is about as low as it goes. 1.0. I wonder if it can go to 0 itself or negative. I doubt it. 1.0, that's the lowest I've ever seen. So you never know, this could be the time to buy it or start getting into it. The Commodity Research Bureau Index, CRB, on a daily chart shows it bouncing off of its bear market designation at 20% and heading up again. So that's about the third bounce off of there. And a lot of this is on speculation for a robust China reopening from the COVID-0 policy. And it will take China a long time to retool and get up to speed so they can crank it out and increase the supply to the world, which will ease the supply bottlenecks everywhere. However, if that happens, then inflation will probably kick in, so that will be a fine balance when they get it all up and running, and they're not going to get it all up and running for at least a year till it's 100% cranking it out. Think about it. Would you, if you were China, start cranking it out immediately, knowing that a possible recession is right around the corner? So I think they're going to take it slow and it's not going to be at least for a good solid year before they're really up and running full tilt. And right away, everybody's running copper and the base metals all up, so I would be careful there. However, yes, the CRB is in a primary bear market, but that's in the context of a secular bull market from the COVID crash low to up here, so these usually aren't as bad. 20%, that's the minimum requirement for a bear market. And while we're on the subject of China, here's the Shanghai Composite Index, SSEC, on a monthly chart. And it's getting near the apex of a humongous symmetrical triangle that started back in 2006, 2007, and running all the way to the present day here. And there's another secondary uptrend line that starts in 2013 in light red here, thin red, at a whipsaw here. And then it's right above that today, but it did fall below the bottom of the symmetrical triangle in thick red back here, and it went under that secondary uptrend line in light red, thin red here, and then it bounced back, and we're right in between the two trend lines here near the apex of this symmetrical triangle, and it's right up against its 12-month moving average. Let's see, 31.95, and the 12-month is at 31.79, so it's above that slightly. And now the 12-month has to turn around and get above the 24-month, which is at 33.49, that red one here, so the blue needs to go up above the red. But price is above the 12. And here's the Kappa curve for the Shanghai Composite monthly chart. You can see that it's trying to plane out and maybe hook up a little. Let's monitor that. It's at negative 22.43. And the rate of change 18, rock 18, is trying to get back up to 0. It's been below it for a while. Spent some time above it for almost a couple of years. So let's see what happens here. That will be monumental, getting back above 0 for the rock 18. The S&P 500 support and resistance level big board chart shows the gray area at the relative retrace up 1, 200 EMA, the downtrend line from 0104 2022, and the conversion line 26 bars back concerning the lagging line. And to the upside, I gave R1 the green up resistance at 40.1947, and to the downside is daily Bollinger Band upper band 200 simple moving average and the pivot point. And get below the pivot point, we got to hit the top of the cloud, get through the top of the cloud, and then we have to watch out for the daily baseline and the weekly conversion line. This would be a nice spot somewhere above this area to add to your longs or look for new ones, as if it does go under, you can jettison what you just picked up and it won't be that big of a loss, or you can hang on to it and see if it hits the S2 39.27 around that daily baseline and conversion line. Right above it is the weekly Bollinger Band mid-band 39 periods moving average. So if it hits this, I would start buying. I will. I don't know what yet. Maybe just adding. And if it hits this, I'll add more. And then if it goes under, we'll watch this level here. And the monthly support and resistance, 39.15. I suppose you could let it go all the way back down to the Fortress Fed resistance at 39.06. Has a lot to go through. That uptrend line, weekly diamond bottom extension, perfect uptrend channel, lower line 39.14. So there's a lot of support to the downside if it cracks the daily baseline and weekly conversion line. And the S&P 500's daily AD line is running away compared to the NASDAQ 100's daily AD line. NASDAQ 100 is above its 21 EMA signal line, not by much, but the S&P 500's daily AD line is getting well above its 21 EMA signal line. And price in the aftermarket hour at the close of extended trading hours on Friday, 39.99.70, so right at 4,000. It wasn't that far away from where the end of day closed, 39.99.09. And interestingly, the New York traditional McClellan breadth oscillator to get back to zero would require 5,007 decliners over advancers to get back to zero, and it actually went down from 52.39 the previous day. And so that's the all-inclusive NYSE. It has bond funds and ETFs and that in there, but still that's interesting to think about. I think it's been run up enough, and a lot of investors have stopped and just waiting to see where the dust settles. That's what that could be. So the breadth is just a little bit less than it was the day before. And this is the first time this has happened. The ROC 1 is going sideways at positive 0.40, along with the ATR2, which is going sideways at 56.51. Every time that I've seen the ATR2 go sideways, there's been an up move the next day. Now we have both the ROC 1 and ATR2 going sideways, so that's uncharted territory for me. You would think that because this went up, that it would go up even more, so let's see what happens. So here's the ROC 1 ATR2 PPO extreme chart, and I call these little ticks like this, even though it looks like ROC 1 is pointed up and ATR2 is pointed down. We could zoom in on this area of the chart and you'll see it clearly going sideways here. There's the ATR2, and we'll scroll down to the ROC 1, and there's the ROC 1. And the PPO extreme is still above zero, getting some gulps of air in. And the stock's above their 20-period simple moving average, and the S&P 500 is back up in that area, 80 and above, where that's really nice to have that going on. You'll know you're in an uptrend when this becomes sustained like this here and this here. And the S&P 500 AD line made it above that rising peaks trend line here. I think I called it the rising valleys last time. It's the rising peaks with all sorts of whipsaws here. But it made it above it again, so that's a good sign. Look at that in the thumbnail. Just straight up like a rocket shot. And the MACD shot up above zero. It's well above its signal line. RSI had the mean reversion bounce after a couple of bottoms here, like a double bottom, and then just shot up past 50 above its signal line. And it's not as of a rocket shot as this, but it's really nice to see that. It's not at 70 yet. And the on-balance volume looks like the NYA on-balance volume. It finally got that rocket shot here where everybody came in and bought. And the S&P 500 PE ratios have ticked up a little bit. The 12-month forward PE up at 1737, but the trailing 12-month is a little concerning at 1915. The Fed's not going to like that, to see these valuations getting run up like that. Have a great day.